Good morning, everybody. I hope you had a great evening. We got in the low 80s yesterday, and we've got a forecast high of 60 today and below 50 the couple of days after that, but with moisture. So we really do need the moisture. Hard red winter wheat, grasslands for turning feeders into steers and heifers that are ready for the feedlots. So we'll take the moisture. Okay, tomorrow is the FOMC meeting, the announcement. They start their deliberations today, and like we said yesterday, everything is centered on the word patient in raising interest rates. If they drop the word patient, they'll probably throw a pretty strong economic forecast out, and the weak first quarter numbers will be explained away by bad weather, and they say we expect the economy to recover strongly in the second and third quarter, just like it did last year. So therefore we can raise interest rates. Now, whether that happens or not remains to be seen, but it is a forecast, and they do base their policy on these forecasts. Their economic forecasts are always slanted to the positive side, and every Fed economic forecast has been revised lower for the year, not necessarily for the individual quarters, since 2009. So their track record for what actually happens isn't very good. But they, like other government agents, they can't come out there and tell you doom and gloom. That wouldn't fly with whatever administration, be they Republican or Democrat, that are in power. So they do have to walk that tightrope too. So tomorrow we're going to see what the word patient, if it's still in the Fed's language about when they will raise interest rates. Most people think interest rates are going to be raised come June. So that's where we stand right now. The overnight, the stock market is lower, quote unquote, because of jitters about what Janet Yellen will say tomorrow. Yesterday's rally was based on weak economic news, off the idea that the Fed would not be able to raise interest rates anytime soon. So now today they're back. The stock market's off a little bit. Financials are up, off the idea that the Fed may be able to raise interest rates sooner rather than later. So tomorrow we will find out. The FOMC meeting tends to freeze the market in a trading range, but yesterday's market was higher and was pointed higher on the close. The overnight session held where it could have, just above the volume numbers in the mean, and we had volume right here, so it kind of split this area right there, and then the market has taken off. So resistance is going to be 24 to 28, and then the buck to 04. So this first sell is going to be 23 to 27, sell 1, then 31 to 03 for sell 2. On the buy side, we had this breakout from 16, so 13 to 17 buy 1, 5 to 9 buy 2. Today's news: housing starts, plus 1.0, I believe it was 58. That's a 0 in front of that. And permits a little bit lower at, excuse me, I have those reversed. So starts are 48048, and permits 058. And again, they'd like to see these numbers come in on the high side because the Fed's number 2, the second economic leg of their economic forecasting tool is the housing market. And we'll see if that actually happens. So we'll see a trading range with an upward bias, especially if the E-mini sells. The idea is that if you're looking at strictly on fundamentals, the Fed will not be talking about raising interest rates tomorrow, but that doesn't mean that they won't say something. And again, it just gets back to how strong do they think the economy really is. Underneath it all, this automotive sector is still very strong, but it has been weakening. They have cut back on the subprime automobile loans and has cut into automobile sales a couple 100,000 per month. So it has had significant impact. A couple things happened overnight. Australia says they will enter into negotiations with China about a clearing bank. The Asian and Australia's business is all in Asia. It's not too much with the United States, so that would be a pretty logical move. But once again, under the leadership of the European Union and the United States now, people are making deals with Russia, with China, with anybody else they think that they need to make a deal with to preserve what's going on. So the United States stature in the world has come down quite a bit over the last 6 years. And the reason for that is that bottom line is the United States can't be trusted to do what they said they're going to do. And if that is ever to change, it won't change overnight. I mean, it's so easy to tear something down. It's very, very difficult to build. And anybody can come in and bust things. It takes a special person that's able to build a business or any kind of functioning entity. Okay, sell 1, 15 to 19. We're going to go a little higher than 23 to 27, the upper end of the range. Sell 2. The breakout came from 24 to 28. We're currently at 11. Last rotate down was 5. So I'd like to, this 29 to 1 would be where I'd like to get in. So 1 to 5, buy 1, but closer to 161. And then 25 to 29. I think that 29 to 01 area is probably our best shot if this market's going to continue to trade higher to get long, but may have to adjust that after the opening. Well, I think if the Fed keeps interest rates and the word patient, they're going to keep interest rates where they are right now, but if they keep the word patient, it would show that the Fed thinks that the economy is weak enough or soft enough that maybe we can't raise interest rates sooner. So that should be supportive for gold initially. The bottom line you're dealing with, Laramie, though, is that the central banks sell gold futures to buy, then turn around and buy physical gold. So if they drop the word patient, it shows that they think the economy is strong and that people will be going back to work, higher tax revenues, less money to be printed. So again, that's the way I would assess it off the news. They're keeping interest rates low and have kept them low because of economic weakness. So I think gold's probably on hold. One of the nice things about gold is that on major news announcements about 30 seconds before the news hits, quite often gold makes the move with the news before it's actually released. So they got a pretty good methods of ferreting out what the major news announcements are going to be before they actually hit. The news algos, if the word patient is dropped from the language, they'll sell financials, they'll sell equities, and I don't know if they get into what kind of size they do in gold. So that's my take on it. Right now I see a trading range. We got support 45 to 50. That's your buy area. 1, 2. On the sell side, you got resistance 60 to 65. So 58.60, sell 1. 63.65, sell 2. And we'll just have to see what happens. Gold's pretty quiet, and you can see the last 4 days, gold really hasn't done much. So 40 to 50 tick trading targets haven't been really the way this market has acted. 20 to 30 has been about what you can get out of them. Well, that's a good way of trading. The overnight session high and low is initial support and resistance, and if they take the overnight session high or low out, you've got your directional move indicator. The overnight session highs and low in all markets are support and resistance, initial support and resistance, and 80% of the time that's the high or the low for the entire session. So it's a pretty good directional indicator if you take out the overnight sessions high or low. Okay, the euro rallied with some strength, I might add, overnight. The talk out of Germany is we don't know what to do with Greece anymore. Shame on the Greeks. They're telling the world that they won't be able to repay their debt. Everybody knows that. You just aren't supposed to verbalize it and put it into the news. So when we take a look at this market, the 106.50 area should be resistance, and basically 107 from there. So 45.55, sell 1, 75 plus or minus, sell 2. On the buy side, London's low was 85. Last rotate down in S period was 4, and X period was in. So 6 to 10 is buy 1. That's pretty aggressive. Really do not like the long side of the market. Then 105.75, buy 2. And if the FOMC removes the word patient from their language, that means the United States will raise interest rates sooner rather than later. The European Union's and central banks' interest rates are very low. That should hurt the euro currency. And if they keep the word in there, probably a little bit higher, but it isn't going to break out to the upside, because that's against current European Union and European Central Bank policy. They want the euro lower so they can increase exports outside the European Union. Okay, crude continues to get hammered. It is pointed lower. $40 is the number most people are playing for. I put a long article up on an interview with one of the princes from Saudi Arabia, and he says, hey, too much supply, not enough demand, that's why oil prices are low. You know, crude went, in 9 months, it's gone from $115 to, last quote, $42.75. That's an unbelievable move if you think about it. There's been 4 busts. I've been through 4 busts in the oil patch where they've cut the price in half. They've cut it by more than half right now. So Saudi Arabia is saying, hey, it's not against Russia, it's not against Iran or anybody else out there, or the frackers in the United States, which is a nice way of putting it. It's just there's more supply than demand, and we're just going to keep production levels where they are. People will sell as much as they can, and then the market will balance itself out, and crude will start back up. So we will see. Stops below the overnight session low, 42.25, 42.50 buy 1, 41.75, 42 buy 2. On the sell side, the spill was from 43.25, so 43.25 to 43.50 sell 1, and then 75 to 44 sell 2. Okay, we're going to play with the F6 screen a little bit in crude oil today. I'm going to show you a couple of things. that might be helpful to your trading. The earliest information, if you have an idea that the market might rally or might sell. The numbers look pretty good for crude oil on the F6 screen on the number 3 panel. The number 2 panel don't really have much of an idea. Haven't figured that one out yet. But I think we can, given a little bit of time. Problem is, given the liquidity in crude oil and gold, is that the big players, a 5 lot or maybe a 6 lot, and that makes it kind of difficult. Okay, the breakout in the E-mini came from the 58 to 60 area. We're at 63. Yesterday's other breakout came out of 56. So I think we're pointed lower. We're going to try 55, 57 for buy one, and the idea we got ourselves a trading range 50 to 52 would be better. And we're going to put a question mark at 60. Stops below 60 might be it. On the sell side, 69 to 71. And in this case, the last rotate up stopped in the 65 area. So we're looking at a 65 to 55 market or a 60 to 69 market. I don't think you can put a lot of stock in the chatter this morning. I know the market's going to be a trading range just because of the Fed, and they might try to send a message to the Fed. You raise the word patient, remove the word patient, we're going to bomb the market, which the Fed doesn't want. So if the Fed does remove the word patience from their statement, then they got to come up with something else, because the only bright spot this administration can talk to that's for real are stock market prices. Starts and permits. Starts has more impact because it's actual construction. Permits, when the economy is really booming, has more impact than starts because people are trying to guess what's coming next. So that's what we have right now. Might take a 65 to get in short. We'll just have to see if we get our setups in the 65 area. We can take them. I don't know if resistance is 70, 75, or 65 to 70. So we'll have to let that set up. Again, I don't think the housing starts information will play. And it'll take at least 20 minutes to get everything up and running. So I'm going to get busy on that later.